Hello everyone, welcome to Economy Simplified Series of Drishti IAS. My name is Disha, and today the topic for the discussion is CBDC, that is Central Bank Digital Currency. So in this video, we are going to discuss that why CBDC is in news again and why I chose this topic. See, in this year itself, UPSC has asked a question on CBDC. That means this topic is important for us. So we will try to understand the concept, what is the features of CBDC, what is the importance, and at last we will try to solve this particular question. So let us have a look into the news, what the news says. See, the Chandigarh has become the first union territory to introduce the CBDC-based Direct Benefit Transfer system for the ration beneficiaries. Okay, now CBDC has been merged with the Direct Benefit Transfer. Okay, and it has been introduced in Chandigarh. Now, Union Agriculture and Farmers Welfare Minister Shivraj Singh Chauhan described this initiative as an important step towards making food subsidy distribution more transparent, targeted, and efficient. Now, first of all, let us try and understand that what is direct benefit transfer. Okay, then only you will be able to understand the CBDC, because once you try and understand about the DBT, you will understand its limitation, and then the CBDC will come to the picture. Okay. Now see, you all know that the government provides subsidies to the vulnerable sections of our society. Okay. That subsidy could be related to anything. It could be related to food. It could be a fertilizer subsidy. It could be a scholarship or any other as such thing. Okay. So there are different mechanisms to provide subsidies to the people. DBT is one such mechanism. As the name suggests, it is a direct benefit transfer. Okay, direct benefit transfer. That means benefit will be transferred to the beneficiary's account in a direct manner. There are no intermediaries involved in that. Okay, see, earlier there used to be one problem. What was the problem? The government used to release the subsidies. That subsidies reaches to the intermediaries or the various government departments, and then at last it reaches to the beneficiaries. Now, this system had one problem. What was that problem? There was the issue of leakages. There was a lot of corruption happening in that particular process. Also, the subsidies was not even reaching to the right person. There were a lot of leakages involved, and often at times, the intermediaries used to do a lot of corruption with that particular amount. So, the government came up with the solution, that is direct benefit transfer. The government said that we will not include any sort of an intermediary in that entire process. Whatever subsidy we have to provide to the, let's say, farmer, we will transfer that particular amount directly into his account. Okay, so that was the concept of direct benefit transfer. But direct benefit transfer also has one limitation. What is the limitation? Let's say that the government has the objective to remove hunger. The government wants to achieve the sustainable development goal second, that is zero hunger. And for that, the government is releasing a lot of food subsidies. Okay, let's say that the government is giving 2,000 rupees to the beneficiary, so that these beneficiaries can purchase food grains from the ration shops. But there is one issue which is involved here. What is that issue? There could be a possibility, let's say that the government has transferred 2,000 rupees in the bank account of that particular beneficiary. Now, this beneficiary can use this particular amount in for other purpose as well. This beneficiary, probably it might be a possibility that this beneficiary can use this amount to fulfill his or her other needs. Might be a possibility that he can use that amount to purchase or to buy alcohol related stuff, or to purchase clothes and various other things. Now, this is a problem for the government. Why it is a problem for the government? Because the government won't be able to fulfill the objective. There is the issue of transparency here. The government wants to make sure that whatever funds they are releasing, is it getting utilized for the purpose for which the government has released the subsidy? All right. So that was the issue with direct benefit transfer. And that's how the government came up with the new concept, that is CBDC. How CBDC is going to solve the problem of direct benefit transfer, that we are going to understand here. Okay. So let us read this. Unlike ordinary direct benefit transfer, where money is transferred into a bank account and can generally be spent as the beneficiary chooses. See, here it is up to the beneficiary that where he want to spend that particular amount. Okay, the government cannot interfere here. This system uses the programmable or controlled CBDC feature so that the transferred amount can be used specifically for food grains and essential food items. So what is the key word here? Programmable and controlled. That means CBDC is programmed and it is controlled. Whatever funds the government will release through CBDC, it will be programmed. That means now these 2000 rupees will be programmed that this particular amount should be spent to purchase food grain items only. It cannot be used for any other purpose. All right? Okay. Now, why is CBDC being used? The government is trying to solve a specific problem. DBT has reduced leakage, but once the cash reaches to the beneficiary, it may be used for purpose other than the intended objective. Okay, so there is an issue of lack of transparency, right? CBDC can potentially introduce programmability. That means the amount which the government will release, it will be programmed. Okay. For example, the government provide 1000 rupees equivalent benefit. Then CBDC wallet will receive it, right? CBDC wallet will hold 1000 rupees. Now beneficiary can use it only at the authorized food ration merchant shops. Okay. Now from here, let us read this particular concept, that is CBDC. What is central bank digital currency? Okay. Central bank digital currency is a digital form of country's fiat currency issued and backed by central bank. Okay. Let us break down this. First of all, it is a digital currency and it is issued by the central bank. What we got to learn from this is it is a digital currency and it is issued by the central bank and it is a fiat currency. Now what is fiat currency? Fiat currency is a national currency whose value is not pegged to a commodity such as gold or silver. Okay, a fiat is a currency whose value is not attached by any other commodity. It is not attached to the value of gold and silver. For example, if you have 100 rupees note, you cannot go to the RBI and you cannot tell RBI to give you the gold of worth those 100 rupees. Okay, so this is what fiat currency means. But why fiat currency is important? If the currency's value is not attached to gold and silver, then how it is valuable for us? It is valuable for us because it has what? It is backed by the government. It has a sovereign backing. Okay, it is backed by the government. RBI has issued it. That's why from there it gets its monetary value. Okay, so CBDC is what? It is a fiat currency. That means it is a central bank backed currency. It has a sovereign backing. All right. Now let us talk about the key features of CBDC. First feature is it is a digital form of sovereign currency. Okay, it is just a digital form. Let's not overcomplicate it. Let's say that you have a 100 rupees note. You have a 100 rupee note. Now, if you will convert those 100 rupee note in digital wallet, then it will become your CBDC. Second, it is issued and regulated by the central bank. If in a statement it is given to you that CBDC is issued by the central bank, that statement would be correct. CBDC is issued and regulated by the central bank. Third feature, it has a status of legal tender. What do you mean by legal tender? A money becomes legal tender when you can use that money to fulfill your liability or obligations. Okay, let's say that you have taken a loan of, let's say, 1 lakh rupees. So you can use CBDC to fulfill your legal obligation because it has the status of legal tender. All right. Next, exchangeable one-to-one with existing fiat currency. You can exchange your CBDC with fiat currency. Let's say you have 1000 rupees stored in your digital wallet. Now, let's say you want to convert these 1000 rupees into a cash. You can easily do that because it is exchangeable. Okay. Next point. It can be used for payments and settlement. You can use CBDC to fulfill your payment obligation. You can make settlements to CBDC. Next point. It can operate through digital wallets and distributed ledger blockchain-based technology. Okay. Now, these are the technology. See, it will be operated through digital wallet. Digital wallet is same as your physical wallet. Where do you hold your cash? You hold your cash in a physical wallet, right? So your digital currency will be stored in a digital wallet itself, and various other technologies can be used. Distribution ledger technology can also be used, and blockchain based technology can also be used here. Okay. Now, why CBDC is needed? What is the need of CBDC? See, first of all, it will reduce the cost of physical currency. Okay. If we talk about cash or physical currency as such, you must be knowing this, that it includes a lot of printing cost. When you print a certain currency, it includes a lot of cost. You need a paper for that. Okay. So if we introduce CBDC, then it will reduce the cost of physical currency. Okay. And it is also environmentally sustainable because a lot of papers are being saved. First point is this. Next, it reduces risk associated with physical currency. Okay. Now you must be knowing this, that when you carry physical currency, it is prone to risk. Okay. It has a risk of theft or robbery. But if we talk about CBDC, it is more secure than your physical currency. Okay. So it reduces the risk associated with physical currency. CBDC also promotes digital payment. Right now, India wants to increase its digital payment infrastructure. We want to make it more broad and comprehensive. So if we include CBDC in our direct benefit transfer mechanism, it will definitely promote our digital payment. All right. Next point, CBDC can potentially contribute to financial inclusion. Now, financial inclusion, if simply I have to explain you, what does it mean is that you want to bring more people to the financial institution. You want to include more people in the banking system. Okay, you want more people to save, to accept their to submit their deposit in the banks, to take loans. You want to integrate people in the entire financial system. That's what financial inclusion means. Now, how CBDC can contribute to the financial inclusion? Let's say that there is one person whose name is Mohan. He lives in village and he lives in a very remote area where there are no banking branches available. Okay, and he wants to avail the benefit of government subsidies. The government has released a subsidy. Now, if we talk about in a traditional sense, if we talk about, if the government sends money into his bank account, for that he need to visit to the bank branch to avail that benefit. Okay, but if he has a digital wallet, he can utilize that particular amount in his phone itself. Okay, so that's how it contributes to the financial inclusion. All right. Now let us talk about what is the difference between UPI and CBDC. Okay. See, Digital Rupee is just another name of CBDC. Okay, Digital Rupee is also known as CBDC, right? So we will look into the differentiation. What is the difference between UPI and CBDC? If we talk about UPI, UPI is a payment system in itself. UPI facilitates your transaction. UPI is not money in itself. Okay, so you have to remember this, that UPI is a payment system or it's an interface. While if we talk about CBDC, CBDC is a digital currency. It's a currency in itself. So there is a difference between UPI and CBDC. Okay. So basic nature of UPI is that it is a payment system. What is the basic nature of digital rupee? That it is a digital currency. Now, what does UPI represent? UPI represent a mechanism to transfer money between bank accounts. UPI facilitates the transactions. If you have UPI, you can facilitate your transaction. You can send your money. If you have a different bank account, then still you can send money to the person who holds a different bank account. All right. Now, what does CBDC represents? CBDC represents the digital form of sovereign currency. Okay. Now, UPI is developed by NPCI. Very important fact. Now, CBDC is issued directly by RBI. Okay. Let's talk about the nature of money. Now, if we talk about UPI, UPI transfers commercial bank money. Okay. Let's say that you have an SBI account and in your SBI account, there are 50,000 rupees available. Now, you have to send 5,000 rupees to a different person who holds a PNB account. So, UPI is somewhere facilitating the transfer, right? UPI is transferring the commercial bank money. You two have different banks. So, UPI is there to facilitate that particular transaction. If we talk about the nature of money of CBDC, so CBDC represents the central bank money. Okay, it is a central bank money. All right, let's talk about the liability part. If we talk about UPI, so the liability ultimately lies with the commercial bank maintaining the account. Okay, who holds the liability? It's the commercial bank who holds the liability. Okay, let's say that you have your bank deposits. You have 20,000 rupees in your SBI account. So SBI holds the liability. I hope you are able to understand what I'm trying to say. In this case, SBI holds the liability. SBI owes you 20,000 rupees. Okay. So liability ultimately lies with the commercial bank maintaining that account. If we talk about CBDC, direct liability of RBI. Here, RBI holds the liability. Okay. Next, if we talk about UPI, where the money is held, UPI transactions are made through the bank account itself, right? And if we talk about CBDC, where the money is held in the digital wallets, in the Digital Rupee wallet. Also, do not get confused between the bank deposits and the digital wallet. Both are entire different concepts. If we talk about bank deposits, bank deposit is the liability of banks. We talk about digital wallet, here your money is not circulating in the banking system. It is stored in a wallet, just as similar to as your physical wallet. Okay. Now, what is the role of the bank? Bank maintains the accounts and facilitate the transaction. If we talk about UPI, then bank maintain the account and facilitate the transaction. Here, in the case of CBDC, bank may provide wallet services, but CBDC itself remains the liability of RBI. Very important point. CBDC is the liability of RBI. Okay. If we talk about the settlement in UPI, it requires the interbank settlement. Interbank settlement happens in the UPI. Okay. Here, CBDC transaction involves a transfer of wallet balances without conventional interbank settlement for each transactions. Let's say that there are two friends, Rohan and Mohan. Both are having a digital wallet. So if Mohan wants to transfer certain amount to Rohan, then the transaction will happen between the digital wallet. No interbank settlements will be happening here. Okay. If we talk about the bank statement, whatever transactions you will make through the UPI, those transactions are going to be recorded in your bank accounts and they are reflected in the bank statements. However, if you are making any transactions through CBDC, if you are transferring money through the digital wallets, here wallet to wallet CBDC transfer may not appear in the regular bank settlement. Okay, so your CBDC transactions won't be appearing in your bank statements. Okay, what is the legal nature of UPI? UPI itself is not money, it is the payment mechanism. UPI is the payment mechanism. However, digital rupee is a sovereign currency and legal tender. Okay, I hope you are able to get the difference between UPI and CBDC. Now, before moving forward, I have a special announcement for you. So, Drishti IAS has came up with the new series, that is World Mapping Continent Series, where you will be studying continents through maps. Okay, and tomorrow there is going to be a live class at 7 p.m. So, the topic will be North America. So, you can definitely join this session to strengthen your understanding of geography subject. All right. Now, let us solve the question. This question has been asked by UPSC this year in 2026 itself. I hope now you are able to solve this. See, consider the following statement regarding the UPI and central bank digital currency. First statement, UPI is a real-time payment system, whereas digital rupee is a sovereign digital form of currency similar to paper currency. Okay. Second statement, in UPI, the end user transaction is settled through the banking system, whereas the digital rupee transactions, the wallet balance is transferred from one wallet to another without conventional banking settlement. Third, UPI transactions are recorded by banks and reflected in bank statements, whereas wallet-to-wallet digital rupee transaction may not appear in the regular banking statement. Fourth statement, in both UPI and digital rupee, the liability ultimately lies with the respective users and their commercial bank. Now, in this question, you have to tell that which of the statements given above are not correct. Identify the statement which is incorrect in this question. I hope now you will solve this question. These are your options. Option A, 1 and 2 only. Option B, 2 and 3. Option C, 4 only. Option D, 3 and 4 only. So write down your answers in the comment section. Okay. If you want me to explain another topics related to economy, you can also write down in the comment section. We will surely bring a video on those topics. And thank you so much for watching. Have a good day.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.